This week, should homeowners secure their property's present value with a reverse mortgage?
Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage.
It's not a stretch of the imagination to think that some reverse originators could argue that home values being at historic highs and base interest rates being below 1%, that now is the time for the older homeowner to at least consider securing their home's value with a reverse mortgage. But is that the best choice? It's a pivotal question that deserves further examination. Surging home values could give one a sense of accomplishment and economic security, despite the fact that both can be suddenly stripped away. It's a harsh reality that the well-informed homeowner actually took to heart after the housing crash of 2008. And housing industry experts know well that to assume you're going to have continual home appreciation each and every year, it's absurd on its face. Yet few homeowners have considered the consequences should their home's value decline modestly or significantly. So how can one secure their home's accumulated equity? Simply put, there are three ways. You can sell the home, you can get a cash-out refinance, or obtain a reverse mortgage. Now, HELOCs or home equity lines of credit are intentionally excluded because the lender can freeze part or all of the credit line should the housing and economic conditions deteriorate. Today, housing economists have good reason for concern in the housing market. The Federal Reserve is increasing our money supply at alarming levels. The early signs of inflation are becoming increasingly self-evident, and current home values and future appreciation, they're contingent upon the successful unwinding of millions and millions of mortgages that are in forbearance today. Now, each individually or combined could force down home values. Jack Gutentag, a regular Forbes contributor, known to many of you as the Mortgage Professor, penned a column entitled "Reverse Mortgages Are an Excellent Hedge Against Property Value Risk, Especially Now." In his column, Gutentag gives us two hypothetical scenarios, both which assume the home is valued at $200,000 and the initial interest rate is 2.57%, which jumps to 7.57%. One shows an annual appreciation rate of 0%, completely flat, and the other 8% a year. And while both do provide an identical monthly 10-year payment benefit, one would obviously leave one borrower with significantly more equity. So one could conclude then that a reverse mortgage makes perfect sense in such situations. But before we entertain using a reverse mortgage to secure the home's value, there are several considerations that both the homeowner and you as an originator should ponder. If the home was already mortgage-free, would a reverse mortgage's future equity consumption over the years leave the borrower with little or no assets that are required if they have to move into a skilled nursing or care facility? Do they want to leave some of the equity or all of it for their children? Is the homeowner currently itemizing their deductions, which would include paid mortgage interest? If they can easily afford their current mortgage payments today, would they be willing to accept the cost of a growing loan balance against the uncertain backdrop of interest rates and their home's future appreciation? Then there's one particular risk for those who are expecting or are dependent on their 10-year payments, and this is very important. As monthly 10-year payments do end if they leave the property for skilled nursing or just simply move, would they now have the means to meet their living expenses? Now, nonetheless, there is one question that could actually incentivize a homeowner to take out the loan. What if I have a reverse mortgage and the housing market crashes? A good question. Well, the good news is nothing. Nothing changes, that is, unless they sell the property. The bottom line is every opportunity comes with costs, each which should be carefully explained and considered. Now, just as home ownership carries unique risks and benefits, so does the loan which is attached to the property. What are your thoughts? Please leave your opinion and comments in the comment section below. And you can share this video using the social media links on this page. If you're on YouTube, you can subscribe clicking the button above. That way you never miss an upcoming episode. And don't forget, today is Monday. Each and every Monday, we release the latest episode of the nation's only weekly podcast for you as a reverse mortgage professional. You can find that on Heckam World or on iTunes. Have a great week, and we'll see you soon.